Following project was conducted in 2012 October, and I only represent my personal opinion of the market and the company and should not be considered as an investment suggestion. Here I start my presentation. Hello everyone. The company I researched was WuXi Pharmaceutical Company. It is a contract research company located inside mainland China. The company has two lines of business. It provides full-line research and development service for those big top players in the pharmaceutical industry. It also able to produce drugs for those players inside China with a relative low cost and a high quality control. For those of you who are not familiar with the pharmaceutical research and development process, here is a chart that shows you how it works. So there are three stages in this chart. It's the discovery stage, preclinical stage, and the clinical stage. Before all these three stages started, the company's top scientists and researchers, they had to design a whole process and a purpose for these drugs. And after they designed the process and the purpose, they will pass the whole plan to staff or assistant researcher or scientists, let them do the hard work and time-consuming works. Those work are actually repeatable. You can actually think about this way in the industry, in the IT industry. Those huge IT companies tend to outsource their programming department to India because of the low cost and high efficiency, and also because of the high employment cost inside the United States. And it's the same story in the pharmaceutical industry. All those repeatable works can be done inside China, and those works will save a huge amount of money and investment that those top players in the pharmaceutical industry that they want to save, such as the staffing cost and all those facilities cost and the maintenance cost. So after the first designing process, those companies will outsource the discovery stage to company like WuXi Pharmaceutical. And the WuXi Pharmaceutical will do all the discovery stage parts, all the phases process, and then give feedback to the company's top scientists. And once they optimize the whole process and redo this again, and finally got the acceptable results, they will pass to the preclinical stage. In here, the same story repeats. WuXi step in and give feedback to the company, and then they pass to clinical stage and repeat. Now, after all these three stages, if the pharmaceutical is lucky enough and the drugs got approval from the FDA, they will be able to produce it and sell it to the market. Here, WuXi actually step in again. They help those companies to produce those drugs with a very high quality factory inside China and the relative low cost as well. So here are the revenue drivers for the WuXi Pharmaceutical. The company was able to attract many top players in the industry to be their customers. And we believe that the company will continue this trend in the future. And second driver is the mainland China market and the CRO market potential. As you may aware of, mainland China has experienced a very aggressive economic growth in the past 20 years. And people in that country has already accumulated enough wealth to support drugs and reasonable pharmaceuticals. And when the age of in the whole country become a little bit elder, people tend to purchase more to maintain their health, and the demand was growing really fast. Here, those local pharmaceutical company will mimic their peers, their global peers, to outsource their development process to companies like WuXi Pharmaceutical. And also because of the CRO market growth rate was so significant, we believe the company should be able to continue their revenue growth rate. And you can, for more detail, you can actually look at our research report. It shows here the overall mainland China pharmaceutical market is projected to grow at the 22% by 2015, and the U.S. Is expected to grow at 16 to it's actually expanded at 16 to percent from 2009 and 2011, and projected to grow at 22% by 2015, which was estimated by Goldman Sachs. And let's back to the slides. As I just mentioned, the company's second line of business are the manufacturing service, which is also a booming revenue source for the company. Here are the breakdown of the company's revenue. The first line of business, as you can see here, has maintained a huge portion of the company's revenue. But the second line, the manufacturing services, has experiencing a very significant growth rate in the last 3 to 4 years. It actually tripled the 2009 around 7% to around 20% in 2011. So we have huge confidence inside this company. Let's back to the report. As you can see here, we actually break down the company's revenue into 2 lines of business, and the forecasted for each period of time by quarterly. And then we combined all those data into yearly data, which you can see here, which is our forecast projections. And let's back to the slides. We estimated the first line of business, laboratory service, should experience a 30% annual growth rate, and manufacturing service should experience a 70% annual growth rate. And we also forecasted the cost of goods sold accordingly. So the valuation results gives us a very happy results actually. For the DCF results, we actually got a $18.4 per share for the stock price. We also did the sensitivity analysis for the terminal growth rate and tax rate, which may affect the company. And it gives us $14 to $22 price range and $14 to $19 price range separately. And for the multiple method, you can actually back to the appendix that we have. We also mentioned inside the report for more details. We choose 4 separate company for comparables, and we more rely on EV/EBITDA model, and this model gives us a stock price of 18.77 cents per share. So for the final recommendation, we actually issue a buy recommendation for this stock, and we believe the price range should fall to $14 per share to $21 per share. The estimate 2012 PE ratio should about 12.3 times, and the estimate 2012 EPS should be $1.22 per share. And thank you very much.